Hey traders, I didn't want to leave you hanging without a futures video, so here it is. All right, so I don't know if there's an opportunity overnight, and if there is, I think it'll be in the Nasdaq. So today, during the day, there was some dislocation between the usual leaders in the Nasdaq, and the big boxes weren't there. The top five or six were lagging, and we had unusual strength in unusual areas. So there might be some vulnerability there. So I'm looking at if they don't take out that long wick, and they are susceptible to fading back unless the big boxes like Apple and Microsoft step up. Microsoft did at the end of the day. So what I'm saying is there might be a dip opportunity here, and the dip might be viable, but the trade overnight, I think it's a dip. So these are limits, and I would short against those limits with tight stops because the upside is like there's nothing there for the bears to shoot against except those tails. So if I go short against those tails, I could fade and get a drop to 16,440 maybe. I know it's asking much, but if that happens, maybe we get the 113 retracement of this guy. So then that will put us into these two bases at 16,420. I think this is the most obvious opportunity if it develops that way. Now this is a 5-minute chart. You can replicate that here with the same tails. On the S&P, the upside is big because we are in the process of breaking out. And it too has resistance, but it's old enough to where it's too far back maybe for the machines to look at. So 4681 or higher on the ES might be a little scary, right, from the short side. But that's what you got. So if you're playing the downside. Otherwise, you keep going with the dips in these rising scallops, like half umbrellas. So what does that mean? Um, the, if they make a higher high and they curl back down, you get long on these curls, and they usually are halfway-ish. So the easiest way to do it is to visualize from here to here and see how it repeats itself. So if you can visualize that, then you can kind of forecast the next one, that type of deal. So you're going to have to move the lines a little bit here and there, but if you trade these ascending inverted scallops, I think they call them. So that is the trade. Either short against these tails with an immediate stop, or if they actually take it that way, go with it. The RTY is kind of a mess. Oh boy. Okay, so if we look left on the RTY, we have had, I'm looking on Thinkorswim and these numbers don't match exactly, but today the open was wild and it gave us a long wick. And on Thinkorswim, I think they made a higher high at 1910 and change. So this is a difference as to which contract I'm looking at here. Please be careful with the with the contract rollover. So here's the whatever you're looking at and whatever you're trading, take the high of the day in the morning, and that's your bogey that they're going against now. So above that, what else you got? There's nothing recent that you shoot against, right? And or buy the dip for the opportunity to come back to it. I wouldn't do anything with this mess unless I'm really active after hours. Again, the most obvious probably thesis to trade is let's see if these new champs, not the big box, are going to be able to elevate the big boxes to their levels. And you have levels against that. I started with the Nasdaq. Hopefully that's enough. We'll do better next time because we might have better charts.